Is there a better love-hate stock than Tesla? In my 25 years of investing, I can't think of many other stocks that have been this polarizing. In this video today, I'm going to provide 2030 price targets, the bear case, the bull case, and the extreme bull case. Now, whether you love Tesla or if you hate Tesla, this video is going to be helpful. I'll provide information to support why the bulls are bullish and why the bears might be bearish. Now, regardless if you love or hate Tesla stock, it's up 21,000% since inception. Now, the question you have is it still going to be a solid investment if you buy the stock today? Whether you're a Tesla bear or a bull, there's no argument that electric vehicles, the adoption is accelerating. And there's a couple charts here on your screen just to show you the dramatic growth in EV sales. So this trend is going to continue. There's no question about that. And right now, Tesla is dominating, especially in the US market, but even globally. Now, some of the stats you see out there can get confusing because there's a difference between battery electric vehicles or BEVs versus plug-in hybrids and so on. So when you see BYD, those numbers are a little bit skewed for those reasons, but we don't have a ton of time to go deep on that today. Now, the other question is, can Tesla continue that dominance? Now, of course, there's no way to know that for sure, so there's going to be some speculation built into that. Now, on your screen, you can see a chart. Tesla to remain dominant in US EV sales in 2030, but share declines to 21%. So you can see the top there closer to 67%, falling down to 21.3% in 2030. Now, these are just forecasts. They're estimates, and there's no way to really know for sure. If you're a bull, you have to believe that the numbers are going to be more positive than this. So Tesla made 35,000 cars in 2014. Now, Tesla has a goal of 20 million vehicles per year by the end of 2030. That's a very ambitious goal. That's a 571 times increase in vehicle production in 17 years. In order to reach that goal of 20 million vehicles by the end of 2030, Tesla's going to need 5 more factories at capacity over the next 8 years, cranking out cars. Now, despite naysayers, Tesla is on track to achieve this. That does not mean there aren't risks along the way, and Tesla's going to have to spend a lot of money to make this happen. But let's focus on the other side of that. What about demand? Even if Tesla can get to 20 million vehicles by the end of 2030, will there be enough people that want to buy the cars? And one thing to note here, if achieved, it would make Tesla twice the size of any automaker in history. And that would account for roughly 20% of the global market for all vehicle sales. So demand has to deal with the price of the car, supply and demand. Now, Elon Musk said at Investor Day that there's a high demand. People want to own Tesla cars. Many people want to own a Tesla, but simply cannot afford one. Tesla has found that even a small price decrease greatly increases demand. So of course, pricing is extremely important. And this is where you get into that push-pull. One of Tesla's huge differentiators right now, people like to think of Tesla as a car manufacturer, not as an AI company, not as a technology company, but a company that makes cars. So many people will compare Tesla to Toyota, Honda, GM, Ford, and so on. So as Tesla is decreasing their prices, well, that's going to impact margins. And that makes more and more bears be more and more bearish. But as you go through this video, you'll see that there is a master plan to all this. There is a vision, a long-term vision. There's also an exponential increase in affordability if a car approaches $20,000. At that price point, nearly 100% of people in the United States could afford one, as well as many other places in the world. Now, this is going to be very important, so remember this part, and we're going to discuss it more later. Now, look at this chart here, Tesla's path to 2030 target. This is showing 2021 to 2030, and Tesla is in the light blue there at 20 million. Now, look at the orange. That's going to be Toyota, and the green is going to be Volkswagen. So I think an infographic like this is very telling, and it's staggering because it's showing you just how much Tesla's going to have to dominate companies like Toyota and Volkswagen. Now, this infographic was made April of 2020. Now, what's interesting about that, if you look at 2023, it says 1.9 million vehicles, and Tesla's on track to get somewhere in that ballpark this year. So this is showing you all the way to 2040 at 44.4 million vehicles, and in 2030, it's 20.9 million. Now, of course, the person that put this graph together, they're very bullish on Tesla long term. I like to try to be neutral and give both sides. So let's keep digging. The price tag to accomplish these growth metrics, well, it's going to be expensive. Tesla could spend an estimated $400 billion or more over the next 8 years to build new vehicle assembly and battery plants around the globe, and another $200 billion or more to buy the batteries, including the cost of raw materials. Benchmark Mineral Intelligence. So they track the global EV battery industry. They're saying that Tesla will require 2 million tons of lithium, 1.3 million tons of nickel, 0.2 million tons of cobalt, and 3.5 million tons of graphite. This is to support that 20 million vehicle production in 2030. Benchmark describes the 2030 targets as highly ambitious. It also says the raw material capacity needed to support Tesla's planned production in 2030, it doesn't exist today. So currently, Toyota is the world's largest automaker by volume. And of course, there's going to be skepticism that Musk and Tesla can get this done. Essentially, over the next 8 years, they'd have to double the production of Toyota. That would be an extraordinary achievement considering it's taken Toyota decades to build that capability. Now, with that said, Tesla is becoming more vertically integrated. They can build these electric vehicles better than anybody else and faster. The question is how fast can the competition catch up? Now, there's a lot more to the story than just producing cars. So let's keep going. Tesla is not just a car company. They're much more than that. They're really a clean energy, a green energy conglomerate, focusing not only on electric vehicles, but solar, battery storage, and much more that I'm going to break down right now. So Tesla's FSD, that's their full self-driving platform. That combines proprietary artificial intelligence, AI software, and hardware to bring autonomous navigation to vehicles. And it addresses two massive opportunities when you think of total addressable market: autonomous vehicles and robotaxis. According to Precedence Research, the global autonomous vehicle market is expected to grow at 40% annually and surpass $1.8 trillion by 2030. Now remember, this video is focused on price targets for 2030, and we'll discuss more about robotaxis later. Tesla has an enormous opportunity to monetize FSD, not only for its existing customers, but also for other auto manufacturers. When you think of the amount of data, the miles driven, the processing, the information that Tesla owns, there's nobody that comes even close. And so people talk about, GM, Ford, and other car manufacturers just doing the same thing. It's not as simple as just turning on a light switch. Tesla's been working on this for years, and they have the ability really to take that proprietary information and to sell it as a software as a service model. Now, just since March of 2021, look at this exponential growth on your screen. This is cumulative miles driven with FSD and beta. We're approaching 350 million miles. That's a lot of time, effort, and money for competitors to catch up. So let's dig more into the robotaxi part. So McKinsey says robotaxis will handle 8% of global transportation by 2035. And some people would say that's very conservative. So FSD is going to be leveraged for robotaxis, but also for ride-hailing services. Musk has talked about how people who own Teslas could essentially volunteer to allow their car to be in this ride-hailing service, to become part of that autonomous fleet. This is from ARK Invest. Autonomous taxis may have the most impact on GDP of any innovation in history. Of course, ARK is always very extreme bullish, so you have to take that with a grain of salt. But it is very interesting information, and even if they're 50% right, the numbers are staggering. So this talks about global GDP with and without robotaxis. Very staggering numbers here. Autonomous vehicles could be one of the most productive innovations of all time, impacting gross domestic product GDP by approximately 20% over the next decade. ARK estimates that the net GDP gains could approach 26 trillion by 2030. And part of this thesis really deals with saving lives. It talks about 30 to 35,000 lives in the United States and 1.2 to 1.5 million lives globally. And of course, that will impact GDP positively on a global scale. This is showing you productivity impact annually from GDP. Look at steam engine. This is 1850 to 1910, then robots, then IT. And they've got robotaxis just way up there on the right. And this is from 2022 to 2030. I'm going to show you a clip here that's really important, and it breaks this thesis down. Here's Cathie Wood from ARK Invest.
We want Tesla to scale its units because each one of them now represents the potential for a robotaxi and a robotaxi fleet. Now, Elon says it's possible that he could launch that fleet this year. We think it's more like last year. But the robotaxi fleet is really going to be, or the robotaxi service is going to be, from a margin point of view, more like a SaaS business. And so we think that it's very smart to maximize units because they have so much option value now.
Yeah. I mean, but we've been hearing about the robotaxi fleet for some time. There's a lot of regulatory barriers to all of that, and certainly technological barriers involved too. So how soon can we actually see that realized? And given the fact that you tweeted earlier today that you've got a new valuation assessment of Tesla coming out, how does that fit into your price target for the stock going forward?
The price target for our stock, and I think it's just hitting now, for 2027, because we do have a 5-year investment time horizon, is our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500, our bear and bull case. Now, just Morgan, on the regulatory side, I actually think regulations are working in Tesla's favor. For, I think, roughly 3 decades, the number of auto fatalities in the United States fell to the low 30,000 range per year. And they've turned around in the last 5 years and moved up to 45,000 plus. And I think the pressure is on the National Highway and Transportation Safety Association to change something. So it is looking carefully at Tesla's data. And during Investor Day, Tesla released some data that we don't think many people paid enough attention to. The most important one is that with full self-driving, a Tesla vehicle gets into an accident every 3.2 million miles. And that compares to 1 every 500,000 miles for the average car on the road.
Okay, so Cathie, hold on. Good afternoon. Yes. It's John Ford. I just want to clarify. Did you say a $2,000 per share price target? Tesla right now is under $200 a share. So yes. Even if you were to 10x that would be an over $5 trillion market cap. Is that what you're saying?
That is what we're saying. We think that the Robotaxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030 and is one of the most important investment opportunities of our lifetimes.
Okay.
And I think one of the reasons for that is it is going to save lives. 80 to 90% of auto fatalities and auto accidents are caused by human error. And autonomous driving is going to take away the human error, we believe.
So what are some other opportunities for total addressable market for Tesla? Well, one is the Dojo supercomputer as a public cloud services opportunity. So essentially using Dojo supercomputers to train AI models, just as AWS does now, Google Cloud Platform, and Microsoft Azure. Now, this is a moonshot idea, and of course, it's going to compete with those big dogs. So these software as a service models, these SaaS models, you think of FSD, Robotaxi, public cloud services, these models would boost Tesla's margins dramatically. Tesla's gross profit margin was 25.6% last year. And Musk says that FSD and software as a service models could raise margins to 70% or higher. Now that would make a major impact on the stock. Now with that said, when we do the price target models towards the end, we're not making crazy assumptions that we're going to have 75% profit margins, that they're even going to have public cloud services or things like Optimus, their robot. Those are just moonshot possibilities that aren't baked into the estimates I'm going to provide. So not just a car company, all the things we talked about, solar, battery storage, you've got robotaxis, FSD, moonshots like Optimus. And some of these stories get crazy, like Elon Musk endorses $40 trillion market opportunity view for Tesla's Optimus robot. I'm not including any of this total addressable market in my analysis. This article says Tesla aims to start retailing these robots, Optimus robots, at around $20,000 in 3 to 5 years. So this talks about a Twitter account that did some napkin math essentially and came up with a $40 trillion total addressable market. That's based on projected retail price of $50,000 and $800 million in sales. Obviously, we all agree here that this is a little bit optimistic. And readers should note that this Twitter account has been suspended. So of course, guys, be careful what you read online and what you believe. Again, I'm not using any of the Optimus total addressable market in my analysis. Now, this next part is very interesting. It's relatively new information, and it goes back when we talked about affordability and getting closer to that $20,000 price target, or that price point where more people can afford the vehicle. Tesla's $25,000 next generation car will have a Cybertruck design. And that's something we haven't even mentioned yet. As Tesla brings out more models like the Cybertruck and more, it's going to increase that total addressable market. Tesla is reportedly preparing to build a $25,000 electric car. And keep in mind, this is rumor. Now, this is from Axios, and they reported that Elon Musk biographer Walter Isaacson has detailed the plan to build a $25,000 electric vehicle alongside an autonomous robotaxi that could ferry passengers around, and that this would have a futuristic design like the Cybertruck. Supposedly begin production this year, with production at scale beginning in 2024. Well, be careful what you believe, right? Design drawings for a compact electric car were briefly shown in a Tesla corporate video earlier this year, leading many to speculate they could be part of Tesla's plans for a $25,000 electric car. In order to sell 20 million vehicles in 2030, they're going to need to have a less expensive car. Now, what's interesting about that $25,000, of course, you have to factor in inflation. So it's probably not going to be a $25,000 car in 2030. All right, the moment you've been waiting for. What's the price prediction here for Tesla stock? Now, I spent the weekend putting together this analysis. Before I share mine, I'd like to share 3 different takes from the Discord community. So we have a Tesla DD due diligence channel in our Discord community, and I asked the question in a thread, where will Tesla stock be in 2030? So Sam Solid was the first response. He says $3 trillion market cap, lots of hurdles along the way. Rates drive a lot of this stock's movement and profit margins, so volatility will continue. Currently $788 billion, so $3 trillion would be $1,000-ish. And then he talks a little bit more about the TAM. Then we have Pitbulls Need Love. He says $2,000 price target by 2030. And then the third one, Derek, in 2030, I think Tesla is around, if not at, $5 trillion market cap. Now, I've got these on the screen. You can pause and read them if you're more interested. If you're in our Discord community, go check out the thread, read them in detail. Feel free to even respond or ask questions. If you're not in our Discord community, visit patreon.com/firedupwealth. Join us today. We have a free trial for Elite. You have nothing to lose. Okay, so those guys say $3 trillion, $4 trillion, and $5 trillion market cap 2030. So if we look at the last 12 quarters, we had 55% year-over-year revenue growth per quarter if we average it out. So the 3-year compound annual growth rate is just under 55%. The 10-year compound annual growth rate, 53%. So when Cathie Wood says $2,000 by 2027, I think it'll be closer to maybe $1,000. But if Tesla keeps the same pace, which may or may not happen, it could be $4,000 by 2031. Now, $4,000 is based on $250. So when I did this analysis, the stock was $250 per share. It also makes the math very simple. Stock is up today, but $250 with no splits considered. And if it keeps that same growth rate, you're looking at basically $4,000. Now, of course, that's not how you're going to analyze a stock. You don't just do quick napkin math and buy a stock off of that. It's just giving you an idea of where it could go. So here's some quick napkin math. Let's use 50% annual growth. Use the same multiples today. It's about 9.1 price to sales when I put this together. By 2031, 8 years, it's going to double every 2 years. So if it's $250 now, in 2 years, it'd be a $500 stock. That's in 2025. In 4 years, it'd be a $1,000 stock in 2027. In 6 years, 2029, $2,000. 8 years, 2031, $4,000. So if you split the difference between the 6 years and 8 years, at year 7, you have $3,000 a share in 2030. My personal target is $2,000 by 2030, which is 800% higher than the $250 stock price when I did this. And that'd be a $6.2 trillion market cap. So you saw those other guys, they were saying 3, 4, and 5 trillion. I'm saying 6.2 trillion. Now, many believe it'll be $10 trillion or more. With a $10 trillion market cap, that would be over $3,000 per share and about 1,300%. So 1,300% higher than where the stock trades today. So the extreme bull case, $3,000 per share, 1,300% higher than today, $10 trillion market cap. The bull case, where I stand, $2,000 a share, that's 800% higher, $6.2 trillion market cap, 2030, 7 years from now. The bear case, $1,000 per share, approximately 400% higher than that $250 number when I did this, and that's a $3.1 trillion market cap. Now, if you want the extreme bear case, maybe it's a $500 stock in 2030. And of course, there's always a possibility that a company goes out out of business. With any stock, that's always a risk. Right now, it doesn't look like that's going to happen anytime soon. I'm bullish on the stock. I think it's a $2,000 stock in 2030. Now, this video is going to get a lot of hate. You're going to have a lot of bears that absolutely hate that I'm saying this. You're going to have some bulls that come on and tell me that I'm way off and that I should be, way higher. And I understand that $2,000 a share, 800% higher in 2030. I get that that's a stretch, and a lot of things have to go Tesla's way. But that $2,000 a share, I'm not even considering a lot of these moonshots that we talked about. So I think the stock's going to be at least $1,000 stock in 2030, and that's assuming, again, no splits. Now, what do you think? I want to hear from you. Drop me a comment below. Is Tesla going to go out of business? It's going to be a $3,000 stock, a $5,000 stock? Where's it going to be in 2030? I want to hear from you. If you're new here, make sure you subscribe to the channel. Click that bell for notifications. Drop me a like. Drop me a comment. Have a great rest of your day. Take care.